Good morning, traders. This is Brad Matheny. Today is the 29th of July, early in the morning, trying to get these things done for you. and This is the gold and metals video. We're going to start off here by looking at a couple of the custom indexes. Then we'll go take a look at a gold and silver chart, show you what's going on. So the consumer index here in July started out quite strong. Thought we might see a bit of a breakout with consumers really driving some economic activity. Looks like consumer activity is really weakening. That means that we could be sliding into a mid-summers kind of malaise in August and September. I mean, I was just out running with family and taking care of things, and I'll be honest with you, I mean, there are people that are out still spending. It's not like we've gone into a massive recession where people are, living off potato pancakes. But understand that consumer activity has not yet engaged. We are back into 2013-14 areas still. I believe this is going to be persistent, and I think we're going to see some real effects of this over the next 12 to 24 months. In the meantime, though, keep an eye on things around you with regards to what's going on with activity, handyman activity, construction activity, commercial real estate. Kind of pay attention to what's going on, what's coming, what's going, what's closing, and go from there. Okay, the gold cycle index, big consolidation phase here in July. This is a monthly chart. This is a beautiful consolidation phase for us gold traders, especially with gold rallying on Friday up to around 1999. It looks like we're going to see that move to 2250, 2350 well before the end of the year. And it looks like gold is building quite a bit of a stealth accumulation mode right over here. May actually, get up into the 2700 before it breaks my line here, my 45 line, where I think we move into real broad accumulation. So it's just a wonderful thing to see. Everything that I predicted 3 months ago is playing out perfectly. The market ratio index, I was mentioning to you that the market was attempting to possibly move out of this lower phase into an expansion phase. Up here, it looks like it's failing. This is dropping. Now for the month of July, we only have we don't have really anything left Monday. But if this fails and moves back down here into this area, we're going to be basically looking at another month of contraction, another month of staying in this area, this middle area here. Then if we fail at that area, we will climb down into this middle area, and that's the next phase, this next downward cycle phase, right down into this area. If we don't see some growth, we're going to see some continued contraction back down into this area. Remember, this area was not bad. The 2015, 16, 17, 18, 19, we were still seeing the markets grow very well from this base level. This just could be, the rollover, the R-shaped pattern that brings us back down into this area, maybe by the end of the year, meaning 2024. Fear index is moving up just a little bit, kind of hard to see, but it is moving up just a little bit. SPY is getting very close to this peak, just like I showed you, and the sentiment index is moving a bit higher. This could be kind of the exhaustion phase here, we'll see, or we could see more continued upward trending. As I mentioned to you earlier, this has got a lot of momentum behind it here, so unless something breaks the market, we could see this just continue to meander upward and really create a secondary bubble type economy or market. So we will see how this plays out. But again, right now, everything is bullish. I'm not telling you to short the market. I'm just telling you that we're due for a pullback, and I'm waiting for it. I don't know where it is yet. And this rally phase has been quite extensive. But in the meantime, we're staying hedged and we're riding it out. Next, the gold trend index. This again, I wanted to point out how gold is doing very, very well to the upside. Again, this is the metals video, so I want to point out that gold has been trending extremely well to the upside over the last 3-4 years. This is a monthly chart, and this is leading me to believe that this is going to be the next big move up to 2,300, 2,400, maybe 2,500 in gold. Is a nice solid push to the upside right over here, and I believe we're just really, it's going to happen in the next 5, 6, 7 months. The standard deviation index pulled downward. I know it doesn't seem logical that gold could move up and the standard deviation index could move down, but that's what happened. And I want you to be aware that, you know, we have this base, then A, B, C, D, and likely we're going to get a nice big pop to the upside with an E phase, possibly moving up into this upper blue channel, maybe above this area with the next big phase. Now that could still be 3, 4, 5 weeks away, so you have some opportunity here. And gold may come back down into the, 1980, 1970 area again before trying to rally higher. But I've been trying to tell you how these deep lows in COVID and then back over here were excellent opportunities to hedge into metals. I've been hedging into metals since 2013, 14, 15, and I'm very well positioned for this hedge right now for this move. But you can still take advantage of it. We're just very early in this rally phase. Metals trend index building a good base here, starting to move back to the upside. You can see we've hooked upward here. We'll see how this plays out. The next move here is going to be equal to this one here. So this is going to be about 3,500. So if we get the base here right around 12,000, that'll put us up here at around 15,500, which will put us at 2650 in gold, maybe a little higher. Metals valuation cycle index trying to break out. You can see here we got this base, we come up here, we go A, B, C, trying to come back down here, maybe a little reversion back down here, maybe before we try to break out of it. But it just looks very, very solid to the upside in my opinion. I see very little downside risk right now. And again, if I were to pick a number and say gold will probably stay above that number, I'm probably going to guess around 1940. Just holding above that 1940 level right now gives us a good solid base. If it gets below 1940, then we could be looking at something a little bit deeper. Okay, the metals valuation index basing again. I drew this flag to show you what's happening. Getting very close to an upside breakout. We'll see. This is monthly, and it could take another month or two to really break out here. But my research has been right on target. Remember, we're exiting the setup phase, moving into the breakaway phase now. Okay, gold cycle patterns. Next week we have rally, blank day, inside breakaway, Harami inside, crush, which could give us a good, crush patterns can be either very big up or down days. Typically a crush pattern, if it's been moving up, will be a pullback day. Then we have a blank day on the 7th, inside breakaway, Harami, and then a temporary bottom, which means that we're likely going to be setting up some support right here. But again, rally on Monday, blank, which means possible carryover, don't know. Inside breakaway, I'm assuming to the upside. Harami line, which means a consolidation bar. And then Friday is a crush pattern. And this is going to be very interesting to see what happens on the 4th. The crush pattern could be a very big move. It could be a big collapse, or it could be a big rally phase. But this is going to be a big trending day, in my opinion. Okay, metals index. This is my normal metals index. Stalled out, flattened out, of course, even though gold was up for the week. And I'll show you that in a minute. But we're looking good here, guys. We're off of these lows, trying to set up a little rally phase. Let's see how this plays out. Again, the NASDAQ is rallying a bit higher. and I mentioned this earlier to you in the video, and the SPY is rallying a bit higher. I am watching these purple levels here to see what happens, see if we get any consolidation. But the markets are really, really surprising me to this upside move. Let's go take a look at gold. So here's gold last week. Look at this right here. Huge upside move. Closed at 19,999 and sorry, 1,999.9, just off of that 2,000 mark. But very solid rotation up to the upside. Remember, I mentioned to you how we're moving from the setup phase back over here into this consolidation, into the breakaway phase back over here, possibly getting as high as 2,600, maybe 2,650, maybe even 2,700. Then we will consolidate and move into the expansion phase up here, and that's going to be where we're going to see the 34, 35, maybe 3,600 phase. And then after that, we are going to move into the extended expansion phase to rally even higher and possibly get up to 9,000, 10,000, 11,000 eventually. So we're in this phase. And remember, I've been calling this for a while now, but we're looking for this rally phase. We're looking for this next phase to come from this level right here up to this level, consolidate, base, and then rally up to this level, consolidate, base, and then rally even further. Okay, and so far my analysis has been dead on. So we'll see how this plays out. Silver, same thing, guys. Okay, silver's the same setup. And here we have silver. There we go. Looks like I've been drawing things last week. Oops, get rid of that. Yep, there we go. Same setup. Setup phase, rally out of it, to breakaway phase, rally out of it, to expansion phase, to potentially some deep event cycle setting up over here in 2029. But again, we are in this consolidation phase here. And let me spread this out. We're in this consolidation phase here, where as gold starts to move, I'll end it there, metals, silver will start to move, and we will likely move into kind of the same type of extended rally to the upside here for silver as gold starts to accelerate. So we're just waiting for this to start. And if you've missed some of the move in gold, and gold is a little expensive for you, silver is still actually quite cheap. And silver will rally probably more than gold. So gold's going to move from where it's at right now, 2,000 up to about 2,500. That's about a 25% move. And silver's going to move from $25 potentially up to $44. That's almost an 87% move in silver. So you can still very effectively hedge with silver instead of gold. Gold is typically your hedge instrument and will provide a great rally. This time though, silver, you might have to wait a little bit for it, but silver is gonna be a pretty impressive runner here when it takes off. Okay guys, so that's gonna be it for now. I know we keep going over the same thing, but you know, my analysis is holding up very well. Last 3 months plus, I've been dead on for metals. And actually, I go back further than that, all the way back into 2014. But just to let you know, this is the opportunity that you need to start paying attention to in metals. This is really the hedge of your life right now. Okay, guys, that's it.